right, I don't know if you've seen what a Labubu is or what's going on. One of the fastest accelerating stocks in the past year has been Pop Mart. Pop Mart is the company that makes Labubu. You see Labubu in any number of places. You see the concept of blind boxes. You see one size Labubu sold for $170,000. It wasn't the normal Labubu because it was 6 feet tall. But what's going on and why is it going on? And we've seen it before. But as we begin this, I want to take you to what's called the monkey illusion. You may have seen this before, but I think it's worth looking at.
Protect your dreams under our roof. American Family Insurance.
Sorry.
The monkey business illusion. Count how many times the players wearing white pass the ball. Correct answer is 16 passes. Did you spot the gorilla? For people who haven't seen or heard about a video like this before, about half missed the gorilla. If you knew about the gorilla, you probably saw it. But did you notice the curtain changing color or the player on the black team leaving the game? Let's rewind and watch it again. Here comes the gorilla, and there goes a player, and the curtain is changing from red to gold. When you're looking for a gorilla, you often miss other unexpected events. And that's the monkey business illusion. Learn more about this illusion and the original gorilla.
Anyway, I think that's really important because as investors, we're usually listening to what's going on in the market. We're looking at what the Fed says. We're looking at what Wall Street gurus say. We're listening to economists. We're listening to the normal things that are going on. And I believe that we very often miss the gorillas. We often miss the changing of the color of the curtain. We miss the player missing. We're so focused and so interested in counting the number of passes, we miss a lot of what's going on. So let's return and talk about the Labubus. Blackpink is a South Korean girl rock band, and in a single Instagram story, Blackpink's Lisa triggered over a million TikTok videos and celebrity endorsements that transformed Labubu, the little art toy, into an accessory that everyone needed to have, or a lot of unique individuals wanted to have, a lot of the populace wanted to have, not just in the United States, but worldwide. It soared. The little Labubu generated 870 million in sales and exploded. Know what a Labubu is? Think about this, what they are. That's what a Labubu is. They're kind of an ugly little monster doll. Not very incredible, but they normally sell for $22 each. But it's hard to find. There's a limited number of these. And so the price in the secondary market can go to $150 or $200 or $300 or $400 from 22, tenfold. And not only that, but they also market it in a blind box. So you don't know what you're getting. You buy a box, and 1 out of every 72 blind boxes will have a very special one. In a lot of ways, if you're old enough to remember the McDonald's Monopoly thing, drive up to McDonald's, order Coke, a hamburger, French fries, whatever, and you got a Monopoly piece. The fact is, there were only a very, very, very few of North Carolina, if you know Monopoly. But people drove up. My in-laws used to go to McDonald's every day and get a Coke or French fries just to hope that they got North Carolina. People advertised in the paper for that. We've seen this happen again and again. This is Labubu. And yes, there was one that sold for $170,000, but it was 6 foot tall and it was lime green, and nobody will share who paid $170,000 for it, but it was a single Labubu auctioned off in Beijing. But it's more than that. It's more than a doll. Look at this. The Pop Mart stock surged 500, almost 600%, 600-fold in a little over a year. It sold for more market cap than Hasbro and Mattel combined. That's what happens. It was a euphoria that stepped in. And it gets a very high visibility on a worldwide basis. If you saw the picture a week or two ago of the meeting in Shanghai, which Xi Jinping, flanked by Vladimir Putin and Kim Jong-un, you might have noticed they were holding Labubu dolls. So was the Modi of India, the head of Iran, and the leaders of the other 20 countries of the Shanghai Cooperative Organization. They gathered in Beijing. They're setting a change in worldwide trade. And that's something we'll talk about next week, because that will be on the program for next week. But today, we're just talking about euphoria, and we've seen it before. We've seen this. Think about this. Microsoft went from zero to $1 billion in sales. It took them 14 years to make that move. eBay went from 0 to $1 billion in 7 years. Facebook went from 0 to $1 billion in revenues in 7 years. Zynga. Do you know Zynga? Zynga went from 0 to $1 billion in 4 years. Think about that. Zynga in 4 years compared to Microsoft in 14, eBay in 7, Facebook. The ramp up on some of these stocks has been truly, truly rapid. So what happened with Zynga? Remember Zynga? Remember Facebook came out and you had Farmville? John Deere makes about 5,000 tractors a day. Zynga came up with Farmville on Facebook, and they were selling 5,000 tractors a day. Digital tractors, not real tractors, but digital tractors a day, 5,000 tractors. I was on Facebook and have been on Facebook, used to get offers all the time to do Farmville. That was in the early days. Zynga shot from 0 to $1 billion in 4 years and then began to collapse, was back down. Now they do things like Words with Friends and some of the other things. But this is when euphoria, when there's really no rationality that goes on. This is when rationality goes out the window, euphoria takes over, the momentum, people come out, they buy based on that. That's a thing we've seen before. We've seen it drive up and we've seen it drive down. With Microsoft, eBay, and Facebook, they all had actual revenues and actual product. Zynga had a game. It kept going, but no real substance to what they had. So with that in mind, let me ask a question. Everyone here is an investor, so let me ask the question. Imagine you're watching two people in a coin flipping contest. One of them flips 10 heads in a row, and the other more random, heads and tails, tails, heads, tails, whatever. So let me ask, are you willing to bet a substantial sum that the first flipper's next toss will be heads? If you're brave enough, you can put that in the chat. Are you willing to bet a significant amount that the next flip by the first flipper will be heads? Is it? You know, we've you said yes, you're really outcome focused. That's exactly what many investors do. They chase the hottest coin flipper. They chase the person of the moment. They chase the Pop Marts. They chase the Zyngas. That's the person with the hot hand. The mutual fund whose manager just finished a great streak. Someone who ended up on the cover of a magazine. The recent award winner. If you haven't understood and analyzed a manager's methodology, how can you be sure? How can you possibly know whether the results are due to skill or to chance? You know, the outcome may not be a part of process. It could be a result of just plain dumb luck, but people will file into it. I'm surprised in going to conferences where other investors are, listening to somebody talk, a well-known guru, and I do go to conferences and I do listen to other people talk. And they come back the next year, hear the same person talk, and never think about what they said a year before and whether that was right or wrong, whether it turned out. And nobody's always right 100% of the time. But there should be some track record. I actually record the information and see how well they do, how well they don't do. So are you following the hot hand or are you following the process? I think it makes a huge difference. If you're following the hot hand, maybe you bought Pop-Tart. Pop Mart, not Pop-Tart. So let me ask another question. What do geologists, meteorologists, and doctors and barrows have in common? What do they have in common? You know, geologists can look at 1 billion years of historical data and show models of how the Earth behaves. Meteorologists can look at weather conditions and changing atmospheric pressures and barometers and use their information to predict the weather. Doctors, kidneys operate the same way today as they did in 1025, as they did, or 1125, as they did over 1,000 years ago. Kidneys are the same. Investing is not the same thing. So Jason Zweig, who writes a column and has written a book called the Financial Fact Book or whatever, I can't remember the name of the book, defined a barrow. And in that, he says a barrow is was a person in ancient Mesopotamia who was a priest who specialized in predicting the future by studying the contours of a liver or lung taken from a freshly sacrificed sheep. He worked from an intricate template, often rendered as a clay map that charted dozens of variations on the surface of the sheep's organ. And they presume when the barrow's predictions didn't come true, he blamed it on the dead sheep. Is that not the description of a financial analyst, a technical analyst? there's no endeavor made. Think about the things you hear about. The Hindenburg omen, the Fibonacci retracements, the vortex indicators, stochastic oscillators, triple exponential moving averages, guppy multiple moving averages, saucers, stick sandwiches, double tops, triple bottoms, tweezer bottoms, head and shoulders, long leg DOJ, bearish catapults, bullish abandoned babies, death cross, and the upside gap two crows pattern. Think about it. Do they really hold water? There was an author that wrote a book called The Money Masters. John Train was his name. He offered $10,000 to anyone who could predict the second half of a chart. You didn't have to put anything up. All you had to do was be able to draw the second half of a chart. He would give you the chart of a stock cut in two. He would give you the first half of the chart, and you had to draw the second half. If you could do that successfully, he would pay you $10,000. In the entire time that he made that offer, which was a decade, didn't have a single taker, didn't have a single person who could do that. But so many people are willing to play the hot hand, are willing to look at the price and the volume of a stock and all these intricate technical analysis things that they do. And they'll sell you newsletters, and they'll sell you into their programs, and they'll sell you into following this. But is it really something that works? This is a quote, practical guidance. It only seems reasonable when there's so many so-called gurus who can tell you that they can call the tops on when to sell, call the bottoms on when to buy. If that was truly the case, why would someone like the late Bogle say, the idea that a bell rings to signal when investors should get into or out of the market is simply not credible? Jack Bogle was the founder of Vanguard. After nearly 50 years in the business, Bogle said, I do not know of anybody who has done it successfully and consistently, and I don't even know anybody who knows anybody who has done it successfully and consistently. What was Jack Bogle? And yet, we find many, many investors who look for the Labubu movement, the Pop Marts, the Zyngas, the technical charts. And it only seems fair. If you see something that comes up heads, 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 tails, 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 heads, 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 tails, 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 it looks like a pattern. It looks like a pattern, when in fact, it's just the odds that happens. I mentioned at the beginning of the program that I'm a Seattle Mariners fan. I'm really excited about what's going on with the Mariners. But there's something that I think really makes practical guidance. We do manage money. That's what the business is that I'm in. We manage for clients and we post our track record. You can see how well we do. But so many people would pick a financial advisor. I came out of the big brokerage firms where the mantra was, where they sold us on the idea, sell the relationship, not the performance. Don't tell people about how well you do. Tell them how much they should like you. But I think about baseball, and I think about maybe being in the World Series with the Mariners where they've never been. I think about baseball managers or football team presidents who would never get out a checkbook, sign a player to a huge contract without checking how well they did. Even me, I want to see the stats. I have a 9-year-old grandson that wants to see the stats. When it comes to something as important as net worth, clients will choose an advisor, never looking at how well they do for clients, and only look at how well they like the advisor and what the advisor has to say. Never tracking the performance over the long term, never thinking about how well they do or how poorly they do. Sometimes they do poorly and people will change. 24% on the average of clients are not really happy with their advisor, and especially with the performance, but only 3% really change. What is the advisor worth? And I can tell you this, it's not difficult to track performance. We do it. We hire a third party to go in and every day take the information from our custodian for each and every account, compile that information after a quarter, put it into a quarterly report that's given and sent to each client to say, this is how you do compared to the S&P 500. And we do that because that's the most difficult index over the long term to follow. Every single client gets to see how their account is done on the quarterly basis, on the yearly basis, since they put their money with Adams Financial Concepts. Every single client who does stocks, who does equity. And that includes clients we've had since before I formed Adams Financial Concepts, some who have been with us almost 30 years, almost 40 years. And it includes every single person who's opened accounts during the time Adams Financial Concepts existed, including everyone up to the person who has just 1 quarter of data, every single one. And not only that, that performance can be tracked and verified. If you want to spend the money to track it, we'll furnish all the information. You can see how we do, and it's all verifiable. That's where we are. We're not looking for the rapid increases. We don't see patterns where patterns don't exist. We're not just looking at counting the passes that the players are making. We think about the gorilla. We think about players leaving the game. We think about the curtain changing colors. We think that's really appropriate. We think it's a time. You know, I can talk about myself as I sit at my desk. I do a funny thing. At lunch, I sit at my desk most days when I'm not going out to lunch, and I play online chess. And there's a reason that I do that, because all morning long, I'm looking at the market, I'm listening to CNBC, I'm reading all the stock letters, I'm reading emails, I'm reading everything about stocks. All morning long, I'm really counting the players making the passes and bouncing the ball. But then I really need to take a break, and I need to think about what's going on in the longer and more openly than just what's going on with the players bouncing the ball and passing the ball. I need to think about where things are going. There's only about somewhere between 1% and 3% of professional money managers who can say that they've outperformed the Standard & Poor's 500 over a period of 10 years. We've done it and very close to doing it for 20 years. I think that's a lot of the reason why we're able to do that. We're not so focused in on just the number of balls that are being passed or the number of passes that are being made. We're focused on seeing the gorilla. We're focused on seeing the curtain change. We're focused on seeing the players. That's where we are. That's what we do. And that gives you some insight into where we're going. So with that, let me open it up for questions you may have and discussion. So.
All right, Mike, that was a great presentation, and thank you so much for that. Everybody, it's Chris Prouty back with you. If you have questions that you'd like to ask, you could either put them into the chat. Just know that if you put them into the chat and you send them to everyone, everyone will see your question. If you want to send something where I won't call your name out, send it to hosts and panelists, or you can put it into the Q&A. And Mike, first question is, and this is specifically to you, how do you, and then in parentheses they wrote Mike, how do you, Mike, identify emerging trends before they become mainstream?
I consume a whole lot of material. Very, very little of it has to do with the stock market. You know, you look at a magazine like The Economist, I read books by authors. I read a lot of news. Yeah, I read Bloomberg. I read various articles out of magazines.
Hmm.
I probably read 2 to 4 books a month. I read 4 to 5 magazines every week. And I go looking for information. And when something hits me, I see something raise a question in a book or an article, I go digging into it to see what the impact is. I'm really strange in a lot of ways. Let me share one story. My son is 15 years old. We happen to be in Paris. We're going through the Louvre. If you've been through the Louvre, you know it's huge. But I wanted to show him as we walk through the main salon, the main salle, the main hall. I wanted to show him. I said, look at the paintings. These are the original paint. These are the early paintings. They're about the church because the church had the money. It was the church that could commission the paintings to be done. But as we walk a little further along, we start to see a change from the paintings that were done in the church to you start to see kings and you not start to see nobility. And I said, that's because the financial means, the wealth has moved. It's still a lot with the church, but it's also now moving into royalty. And you move a little further along, and it's not just the kings and the queens and the princes. You begin to see a lot of the nobles. I said, that's because the wealth is continuing to move. And as you come to the end of the hall, you begin to see the painters from the business side. You begin to see the people from Holland. You begin to see the business people. I say that's because the wealth has continued to move along. I'm not sure anybody really walks the Louvre and looks at the paintings and the evolution of wealth, but I do. I like to see the evolution of wealth. I like to know why a church in Chart was built and why all the building went on around 1000 to 1200 AD. That's because they invented the iron plow. You know, that's why the building went on. I could tell you about Nashville. I could tell you about Chicago. I can tell you. I like to look at why things happen way beyond just what goes on in the stock market. Anyway, that's a long answer and probably.
Well, Mike, you know what? To make it just even a little bit longer, one of the things that you and I have talked about is how you look at lifestyle. You look at people's lifestyles.
And we're going through a significant change right now, a worldwide change. Think about what happened in terms of demographics and lifestyles coming into World War II. Prior to World War II, we had the family where the man worked and the woman stayed at home. And then we went to war in World War II. Women had to man the factories, and coming out of World War II, women joined the workforce. Think about what that did. That added a lot of brain power. It added a lot of additional labor that didn't exist before. Then think about what happened in the 80s and 90s as we began to ship products and make products overseas. Instead of just using a US labor force, we're using people in China and other places, low cost labor, but essentially we're making products more cheaply overseas than we can make them here. We're adding to a labor force. Now, as those things have come up, we're again moving into a change in labor force. And for the rest of that, I'll leave it for next week because I want to discuss what's happening. Yeah, lifestyles are changing. The demographics are changing. You know, those things are going to continue to change. And understanding what's going on is crucial for me to outperforming the market and finding those areas, finding those places where you can make money. Someone has just done a study not long ago that showed the entire returns of the stock market since, and I have my number. I don't have the exact numbers, so I'm not exactly sure. But the entire returns of the stock market are due to the performance of 800 stocks. Out of 10,000, it's 800 stocks. And out of those 800, half of that market move is due to less than 50 stocks. And my numbers could be wrong. We'll talk about some of that next week as well.
Mike, thank you for that answer. A couple more questions lined up. Next one is, how long is the typical life cycle of a pop culture trend and its effect on the market from emergence to decline?
Impossible to say.
Mm-hmm.
I mean, we're seeing Labubu, and Labubu has a political aspect to it. That's why Xi Jinping and Kim Jong-un and Vladimir Putin were walking around with Labubu dolls. I mean, China really wants to push that, and they're doing the most they can do to do that. That has a political reason, but is a Labubu really worth $200? How many people are going to pay 200 or 500? How many are going to buy those black boxes, the hidden boxes,
The
the
blind box.
blind boxes, and pay $300 or $400 or $500 to know you have 1 in 72 chances? It's hard to say how long they'll last. Zynga, it collapsed within a year and a half. There's some people that think, and I think I'm one of those, that think that there's a thing called Bitcoin, which has been running for a long, long time, and it could collapse. Who knows? I mean, dot-coms, if you go back to the beginning of the dot-com time, uh, you know, the early dot-coms were in the early 90s. You had check free that dated to I did check free in 1993 as a personal thing. I did Unet and Mosaic in the mid 90s. So that was a slower ramp up that really accelerated into 97, 98, 99 and collapsed in 2 years. So you can't say how soon it's going to go. No more than you can say the person that flips 10 heads in a row could continue to flip heads, could have an 11th and a 12th and a 13th and a 14th. But eventually that person's going to flip a tail.
Thank you, Mike. The next question is, do you think we will get stagflation or any other possible outcomes?
I would say the probability of stagflation is somewhere around 85 to 95%. And we'll be talking about that next week as well. I think it's a very, very big danger. We have a administration that's applying tariffs, which are raising prices. We also have, and those tariffs are being applied to friend and foe alike. It doesn't, maybe not alike, but they're applied to friend and foe. And you also have China and the countries of the Shanghai Cooperative Organization who want to see things change and see China would like to see it that country replace the United States as the world leader. And they've got a lot of support in that. They've got a lot of support of countries we don't like very well as well. We're going to be talking about that next week. So
awesome. Thank you, Mike. Before I get to the next question, if you would love to meet with Mike for a no pressure portfolio review, this is not a sales call. This is actually just Mike who likes to look at people's portfolios and give them some practical guidance. In the webinar chat, I have placed Mike's email address, and that is his direct email. He opens, reads, and replies to every single email he gets. except for when he's playing chess at lunchtime. But I bet he would even do that if you wrote to him during lunchtime. And you can certainly send him an email and grab a time on his calendar for a no pressure, no sales call portfolio review. The next question, Mike, do you think, let me see if I can get this one. Do you think quantum stocks fall into this category, or maybe it's more of a timing risk? Hard to know when this tech will prove out.
When you say, I'm not sure what
I think
you mean.
I think the questions around stocks around quantum computing. So you and I have talked about this, the advancements in quantum computing, synthetic computing, as well as the biological implications.
So let me address it in two ways. One, if you're talking about the computer trading, the algorithms, uh, they have a real issue in that they're always backward looking. They can look at what happened in the past and they can do it much more effectively than you can. And they can look at patterns, and they do find patterns. They find patterns all the time
Mm-hmm.
and what goes on. And some of those patterns repeat and some don't repeat. But they're also very, very quick. They move, they read the news. They can read it so much faster than you do. And I know that there are sell side analysts. Those are the people that are trying to sell a certain stock or fund or whatever. They write specifically for computers. They know that the computers are making 95 or 97% of the trades. And so they write for the computers. Computers are momentum type players. They're not fundamental. At least they haven't been fundamental.
So, Mike, this particular question I think is about stocks related to quantum computing. So this would be like the new emerging Microsofts, IBMs, NVIDIAs.
Yeah, there are going to be those stocks. There are going to be quantum computing stocks. There's going to be AI stocks. There's going to be synthetic biology stocks. We've talked about that in a past program, and we'll probably revisit it again because these are the areas. Technology is changing and changing very, very fast. Will continue to change. And there are going to be new companies that rise up and companies that don't exist today will come onto the scene. We'll see that.
And
There'll
so
be
how
opportunities.
does that relate to what we've been talking about today, which are pop culture trends, or do you think these are more long lasting trends?
Uh, some will be pop culture, but some will really be fundamentally strong.
Mm-hmm.
Uh, some are going to be, I mean, if you look at what we look at changes in lifestyles, demographics, and technology. We think all of those things change and they're all interrelated. You look at where we are today, and we walk around with a computer in our pocket.
Mm-hmm.
I can remember a time when we used a slide rule to calculate things. Now you have a computer that's more powerful than the computers we saw in the 80s and 90s. And it's in a little box that fits in your pocket, a little,
Yeah.
those, and we're going to continue to see things happen. We're going to see health things happen,
Mm.
see things that record what your body is doing. I mean, technology is coming, quantum computing is coming, and the amount of computing power enables a lot of things that are yet to come in technology. Anyway.
Yeah, and so for clarification, this person was asking about some of the smaller players, and I had cited IBM just as an example of, there was a time where IBM was a small player, and then they grew, and is our players like D-Wave, for example, are those kind of players, you know, these smaller quantum stocks, um, you know, somebody's referring to them as a hot hand. like you had mentioned, the hot hand.
There are going to be new stocks. There are going to be new companies that are going to be formed. And very probably, we'll talk about it more next week.
Yeah. It might,
Companies will be formed overseas.
a couple of weeks ago, we had talked about where you look when a stock is on the rise, and in between, like an IPO in the addition to an index.
Yes.
And what, it might be fun to revisit that specifically around these topics, around synthetic biology, around quantum computing, and some of the smaller players.
So we achieve our results primarily by looking at stocks that are not brand new, that are not IPO stocks, but stocks that have solid fundamentals that are growing more rapidly than the market in general. But those stocks have like an S. How do a curve that starts and it ramps up and then at the top begins to slow down. Our process is to find those stocks which are in the rapid increase, not in price, but in fundamentals. Their revenues and their profits are increasing rapidly. And as that begins to fade, then we begin to move on from that stock to another. There are going to be companies that are going to be formed in the next 10 years in which you have no idea of what they'll be doing, no idea of what they'll be doing today.
Mike, somebody's asking about your thoughts on the equal weight SPX, which has the ticker RSP, outperforming the S&P 500, dominated by a few stocks in the last 20 years.
We picked a universal index. If you look at the total number of indexes, the last time I looked, and it was 10 years ago, there were 13 different indexes that were being used to measure against stocks. You can find an index to measure against Pakistani stocks anyway. We wanted to keep it basic. We wanted to keep it simple. We think that the Standard & Poor's 500 are the top 500 or so companies in the US, and with their dividends reinvested. We wanted something that was consistent over the long term. That's very, very, very difficult to perform with, and in which 97% of people fail to perform as well. That was my thought on this S&P.
Thank you, Mike. I think that completes all the questions that we have right now. And so if anybody has a final question, you can certainly put it into the chat or the Q&A. I've also included Mike's email address one more time in the webinar chat if you want to hop on his calendar and have a casual conversation with him. I know he would love that. So Mike, while we are looking for any... Yep, I was just going to hand it over to you to bring it home.
Yeah. What to do now? Make an appointment. Let's talk on a one-on-one basis. Everybody's unique. Everybody has unique reward risk. Let's talk. But while we wait for that, coming up next week, most people have seen the picture of Xi Jinping flanked by Putin and Kim Jong-un carrying their Labubus. The meeting included the leaders of India and Iran and the remainder of the Shanghai cooperation countries, along with South Asian and Middle East partners. Trump initiated tariffs on national friend and foe. What are the impacts? And what's going to happen with the changing world order? That's next week.
Wow.
I moderated a panel this last week for financial advisors and money managers. I moderated the panel and I asked that exact question. I didn't share my ideas, but I will next week. And I might share some of their thoughts as well, which probably weren't as good as mine, but that's no, I'm just. We are coming to a changing world order that is going to change, that is looking at the gorilla, that is looking at the changing color of the curtain. It is looking at the missing player. It's not just focusing on the number of passes that are made between the white team. It's looking at the gorilla the curtain and the number of players. That's next week. I think it's going to be fun to talk about.
Amazing. Well, Mike, before you close up shop for today, I just want to express my gratitude for everybody that came by today and watched your presentation. Dale, David, Godrun, JJ, John, Lance, and everybody else that's here. Really grateful for you taking your valuable time and spending it with us here today. As Mike mentioned, we'll be back next week with what seems to be a really exciting topic. I'm looking forward to that. And we will
And
be here every week.
let
Mike,
me say one other thing. In our discussion, you mentioned IBM. I think for the 5-minute thing next week, we'll talk about how train robberies relate to IBM.
So
That's the 5-minute discussion prior to the presentation.
The pre-show tomorrow. Not tomorrow. The pre-show next week, next Thursday, same time, will be about how train robberies relate to IBM. I'm captivated by that, my friend. Mike, once again, you knocked it out of the park. I hope your Mariners do the same today. Why don't you bring us home? And I wish everybody a good week.
And thanks for being here, everyone. I will see you next week.
Great job as always, Mike.